Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review the silver, gold commodities and talk about the mining companies as well. So without any further delay, let's go ahead and review these markets. First, let's start by talking about the US dollar index. Now, when I made my video yesterday, first of all, I want to point out that when I was making it, the dollar index was at this point, it was getting crushed. Now, it's gone up substantially. When the dollar index goes up, what should you do? Well, you certainly don't buy gold. In fact, you short it. What happened when this dollar index started reversing and continued to chew through these resistance levels? Well, what happened is history, but I'll tell you what happened. Gold and silver fell. If you guys go ahead and look. On Friday day trading, silver wasn't impacted as bad. I mean, Thursday was just all over the place for silver. But then again, silver isn't always directly correlated with the dollar. I mean, even when the dollar rises, silver is the type of commodity that would sometimes fall and sometimes it would rise. I mean, we don't really know for certain. But generally speaking, when the dollar index falls, silver likes to rise. When the dollar index rises, silver doesn't like to fall. Now, because of that, what one should realize about silver is that silver is more of an industrial metal still, more than just a hedge against inflation. But not only that, we got some pretty strong resistance at around the $38 level. Or the $38 level. So you just got to be careful there. I mean, my honest assessment of silver right now is that when trading it, I mean, if you saw between 8 p.m. to 9 p.m., or 10 a.m. to 11 a.m., what happened? Well, silver fell from like 37.90 all the way down to 37.40. Now, if you guys go ahead and look at the dollar index, what happened from 10 a.m. to 11 a.m.? It rallied substantially. Well, if we look at silver again, silver fell drastically, and then it just chopped left and right, up and down, all over the place. So, it's really hard to say this, but yes, you do have an inverse correlation on silver, but it's not as pronounced as it is in gold. In gold, it's just very simple and easy to read. I mean, dollar index at around 10 a.m. onwards started rising substantially, and after that huge rally, it pulled back a little bit, and then you saw gold after that major sell-off in gold. After a pretty major sell-off in gold, it kind of went sideways for a bit, and then it continued selling off as the dollar continued its upwards rally. But right now, with what I'm saying with the gold, I anticipate a short-term bounce off of this area right here, off this trend line. We already got some of it, but I anticipate more. I anticipate as long as we're able to break this 50-day, 200-day moving average, we should be able to. However, if we don't break the 200-day moving average, which we haven't so far, I mean, you would have to close above it, and basically we're not seeing a double candlestick confirmation. It's not really confirmed. As you guys can go ahead and see, the dollar index is already somewhat weakening, but gold is all over the place. I do anticipate gold to have a small bounce right here. I mean, you do have somewhat of a negative move, and it's continuing to come in on it. But that could just be a short-term, candlestick that comes out, juts out a little bit, and then it just goes back up later on. But pretty much, I do anticipate gold to eventually get back up around, say, right here, the 1,340, 1,434.5.7 area. And if you get back up here, that'd be a pretty good area of resistance. We are, trading somewhat of a sideways pattern. We are bouncing off the 50-day moving average and going in and out, up and down on it. But if we continue seeing this dollar index going up, as you guys have seen already, you know what? Chances are gold and silver will have a pretty major pullback. Now, the main reason why you see the dollar index going up is that a lot of investors are anticipating some great earnings, not really earnings, but unemployment report. And a great unemployment report would basically imply that the Federal Reserve would no longer have to prop up the markets with quantitative easing and low interest rates, easy money. As soon as that's taken away, what happens is that the dollar eventually goes back up in value. And for gold and silver investors, that's pretty bad because if you're leveraged, you don't really care. You want people to end up with these inflated, useless paper bills as your leveraged gold position continues to go up in value. But since that's not happening, we're not seeing the dollar index continue going lower, and people are anticipating some great unemployment rate reports. That's why the dollar index is going up in advance. Now, if those unemployment reports blow it out of that ballpark, you're going to see a huge resurgence and strength in the dollar index, and an expectation that the Federal Reserve will no longer provide low interest rates to the banks, provide permanent open market operations, and would give the Republicans extra ammunition to basically keep the Fed from providing easy money to the economy. Now, I just want to go ahead and review another chart, which is going to be for new gold. New gold does have an inverse hammer. So at this point, I can't really be positive on it. That does look like a topping pattern. If you guys look here, inverse hammers are very bad. Regardless, I think that gold will have a short-term bounce in the short term, like off this trend line, but nothing major. I mean, we already got the bounce, but we could probably see a little bit more. But eventually, I do see gold eventually breaking down and continuing its downtrend by breaking this trend line eventually. Once it breaks it at around 1,343, well, that's history. Well, that'll eventually be history, and I'll talk about it in my next video. But if it does break that level, chances are, and by the time it's 10 a.m. or 10:30 a.m. when the stock market opens on the NYSE, if this is broken, you're going to see new gold fall on top of the fact it has an inverse hammer. Those are very negative indications, and I believe at least over the midterm, you're going to see commodities weaken for a bit, and you're going to see gold miners and silver miners take the brunt of the force. If you look here, silver wheaten as well. Silver wheaten is having a pretty decent pullback still, so we do have a negative trend in place. And if you guys look at the 3-month chart, we did initially have a positive upstart move, but at this point it's really hard to say. I mean, down here it was easy to call out a trade at 42, but it's at 43.37. I would just take my profits and run, and just wait and see what's going to come of the unemployment reports. Chances are, I think that silver wheaten could eventually break below this 20-day moving average if those unemployment rates are really good. That basically imply that the Federal Reserve would no longer have to stimulate the economy. Therefore, inflation is reduced even as the economy grows. And that's always good. But at the same time, for you commodity investors out there, that's actually very bad for you guys, because you guys thrive, and quite literally thrive, on inflation and a weakening dollar. I'm just going to go ahead and review the next chart, which is Yamana Gold. Yamana Gold had a pretty awful day, and it did test the 20-day moving average like I was anticipating, but it wasn't able to break it. And to me, that's very negative. If I don't see this area broken, and chances are gold is probably going to continue to weaken off of unemployment report expectations, then likewise I do believe Yamana Gold will fall, at least over the short term. Over the longer term, you'll probably see the dollar index continue its downwards trend, but for right now, I do believe the dollar index has a bounce in place, and it could eventually find some support off of that unemployment report. Therefore, gold mining companies and silver mining companies will negatively be impacted. Gold and silver will fall down in price temporarily, and you'll probably see some great scalps off of different support levels intraday, like the one you're seeing right now. You see, and I just mentioned earlier that I'm anticipating at least somewhat of a bounce, and we're still getting more momentum to the upside. You see, we're even getting close to that target I just made earlier in my recording. So yeah, Anyway, that does it for me for today. If you guys want to check out the charting software that I use, please be sure to check out the link right below this video. If you guys have any questions, like always, just comment, and I'll try my best to answer them on YouTube. And just subscribe to my channel if you're interested in this kind of stuff. Take care, folks, and I'll go ahead and see you guys next time.